This webinar about strategy and finance. This is Martin, and I'm François. We're from the accuracy team. We've been working with PECULIUM for a few months now, since January. We've been working on the financial and strategic aspect mainly. So last week, we talked about the strategy of PECULIUM, which means we calibrated the total addressable market. We saw that PECULIUM was addressing both developing and developed countries. We also saw that as PECULIUM is based on cryptocurrencies, we'll come back on this later. Of course, the PECULIUM was a lot dependent on the market capitalization of cryptocurrencies. So today, for the second part of the webinar, we'll talk about the financial side mainly and the financial projection of the token. So first, we'll describe the PCL token, what is the rights that are linked to this token, and basically what are the products linked to this token. And then we will go deep in the modeling side, and we'll finally end with the token trajectory. That's okay? Okay, excellent. So just a quick remember, PECULIUM is the first savings system on cryptocurrencies, which is based on artificial intelligence, automated machine learning, and the Ethereum blockchain, using smart contracts. So as you know, PECULIUM raised 8.1 million euros during the ICO phase, and today we are in the CCO phase, which is the second token generation event. There are 40 team members around the world. The PCL token is already listed on exchanges like BTC. And most of all, PECULIUM has developed SAIXVE, which is an algorithm which can forecast the price of cryptocurrencies. And thanks to this forecast, PECULIUM can offer a solution, an accurate solution, an optimized solution of asset management. So if we go to the product, yes, excellent. So there are basically two types of products. There are the self-managed portfolio and the automatic managed portfolio. And the self-managed portfolio is split in two parts: the singulus, which is for individuals, and the alterus, which is for corporates. So basically, how does it work? When you enter a singulus or an alterus contract, you invest, for example, 10 bitcoins in this contract. Then you choose the characteristics of this contract, which means the duration of the contracts, which means the risk level you want to take. For example, if I want to take a risk 0, I'm going to have maybe a lower yield, but my investment will be safer. And if I take a really high risk, I will maybe have much higher profits, but I can also have losses. And also, I'm going to choose which cryptocurrencies I want to invest on. It can be Bitcoin, Ethereum, it can be an ICO, it can be whatever. And then I manage my own portfolio, I manage my savings, and whenever I want, I can ask SAIXVE an advice, and SAIXVE is going to tell me the best advice for my for adapted to my portfolio. Okay. So, and this advice will be paid using the PCL token. And I can choose whether or not to accept this advice and to follow SAIXVE advice or not. If I don't follow it, it's fine. And if I follow it, it's fine also. In the end, once the contract is over, there are two options. The contract can be automatically renewed, or I can choose to exit. And if I make an exit, I will pay fees also in PCL token, and the fees will be calculated on the profit I made on my portfolio. So the alterus contracts, which is for corporates, work exactly the same. It's basically self-managed portfolio. The Solidus product is a little bit different because on this product, it's SAIXVE, which is managing the portfolio by itself. So how does it work? The beginning is the same. I invest, for example, 10 Bitcoins in a Solidus contract. I choose the risk level, the cryptocurrencies, under the underlying cryptocurrencies, and the timing of the contract. And then I just give it to SAIXVE, which is going to manage the portfolio for me. And it's gonna make automatic trading based on the cryptocurrencies I chose. Whenever SAIXVE makes a successful trade, for example, it buys a Bitcoin at 10 and sells it at 12, I'm going to pay a fee on the profit. In this example, it's 2, and the profit, and this fee is going to be paid in PCL. And at the end, it's going to be exactly the same, whether I choose to renew my contract or I can exit. And if I exit, I'm going to pay an exit fees also in PCL. So basically, what we just said is like the PCL is a token, is a utility token, which is used to access to PECULIUM services and to SAIXVE forecast. So just to give quick analysis of this token, we did this because the financial modeling depends a lot on the characteristics of the token. So, few characteristics. The token is only issued by PECULIUM. The total supply, the maximum supply is fixed. It's 20 billion, but it can be reduced during the CCO phase if the token are not sold. Indeed, if the token are not sold during the CCO phase, they will be burnt, destroyed, and so the total supply will decrease. So of course, this will be taken into account during the modeling phase, because when you have like a demand, if you have lower supply, of course the utility value of your token will rise. Then the lifespan, once the token is circulating, there will be no burn rate applied, as we can see in other projects. That means that the token will still live for time. The technology size, PCL is an ERC20 token. The rights is, as we said, it's a right of usage. You access to SAIXVE and to the forecast given by PECULIUM. And finally, the business model. The PCL is paid to PECULIUM to have access to SAIXVE forecast. And this is also an important point. And Martin is going to explain you why.
So now we're going to focus on the value creation process and the token utility price trajectory. So what we are trying to explain as of now is to what extent when you will buy this token to access to the product, the price will rise depending on both balance of offer and demand. So this is what we will focus on just now. So as we mentioned, PCL is a utility token. So what it means is that anytime you want to access to PECULIUM services, you will definitely have to buy some token in order to be allowed to access to the services. Meaning what? Meaning that most of the value created by PECULIUM project will be, at the end of the day, concentrated in the token. And the more demand you will have for the services, the more demand you will have for the token, and the more demand you will have for the token, the higher the price in the future. So what did we do, in fact, to analyze financially and strategically this token? Because, of course, we cannot use, I would say, the classical methodologies that we use together as financial advisors for, I would say, normal companies which are not on the blockchain business. So what we did is to go deep into the macroeconomic theory, and we found one theory that could be very useful to analyze some token trajectory. It's called the quantitative theory of money. So what is that? Basically, is a macroeconomic theory that was designed in the past, aiming, in fact, to price different currencies one to another. So what does it mean is that you have a demand for some product in Europe, for instance, you have a demand for some product in the US, and then both demands will be priced both in euros and dollars, and at the end of the day, you will end up with some pricing for both currencies. So we just figured about the same also for other advisors on the market, that it could be very useful to use that formula for a token trajectory. So why? Because in that formula, you have the supply trajectory, you have the demand that will be formulated on the market, but you also have one very interesting parameter, which is the circulation velocity. So what is that? Is that in fact, when you have some project and circulation of goods on a market, in fact, it's quite difficult to know what will be the offer at some point, because when I buy something, then I will put the token back on the market. So meaning that there will be some circulation over, and then we have to put some control of it and to model it in a very thorough financial model. So in that case, in fact, the circulation velocity will be a parameter within PECULIUM's business model. Why? Because as François explained, when you will pay your token, it will be paid to EVE and PECULIUM, and then they will be the one that will be reintroducing the token on the market. So basically, it's just a parameter that will be fixed in that case. So meaning that we will focus on two aspects: the supply trajectory, so the M parameters, and the demand parameters linked to what I've just explained before. So then, if you focus on the demand, basically we have two aspects, B2C demand and B2B demand. So here we focus on the B2C demand, meaning that it will be the services that will be bought by everyone, by me, by you, but not by the companies. So what did we do? In fact, we perform what we call as strategy advisors market sizing. So we identified, based on the visit on the internet website, where the clients might be in the future. And then we determine what we call a geographic mix, what you have here: America, Asia, Europe, and Africa. And we try to figure out what could be in the future growing demand for PECULIUM, linked on the willingness of the people to buy the product. So this is what you have on the bottom of the slide, with a market share increase for both products in the future. So just after the delivery of the products, we expect to have a very sharp increase of the demand, leading to a target market share, which will be quite significant in terms of crypto valuation overall. If you look at the top right of the slide, you will see an average investment per user and by region. Why? Because of course we took into account in the financial model that people won't have the same capacity to invest, whether they are in Africa, in Europe, and in Asia. So we expect, for instance, to have much more clients in terms of numbers in Africa, in Asia, that we can have in France. But at the end of the day, it will be a balance, because the people that are going to invest in France maybe will invest much more money than the others. So we will have quite a balance in terms of, I would say, geographic breakdown in terms of investments. If we focus now on the B2B demand, it's a key point that PECULIUM will not only target the end user consumer, but only will provide some services for existing investment managers, meaning that it will be a platform that will be used to assist basically existing traditional asset managers to break into this cryptocurrency market, to help them to have the adequate and the proper tool to address this market and to limit the risk and maximize the benefits. So what did we say? We basically consider that the growing demand will, of course, happen, but depending on the regulation in different countries. So meaning the harder the regulation, I would say the less demand you may have for institutionals to go into that market. So actually, we try to find some sources on the internet, depending on the capacity from the regulator to find some adequate measures. So we define a growing demand by countries as well, to define what will be the demand of PECULIUM for the investment platforms that will use PECULIUM as a service.
Okay, so now, as we said, so the demand for pre-sale is driven basically by the users and by the asset under management, which are basically the assets which are managed by PECULIUM. For the number of users, what we found is that the Singulus is going to be the main smart contract which is going to be used. And we approximate in 2021 approximately 2,050,000 users. And for the Alteris and the Solidus contract, we estimate a little less, maybe 10,000 users for our model. We did exactly the same thing on asset under management. And so once this is said, we can say, okay, we are forecasting the utility value, but why in that case the PCL token is not at 0 right now? Because we still don't have the product. It's basically because there is a speculative demand which represents the anticipation of the market of the transactional demand which is linked with PECULIUM services. So put it in another way, we can say that the transactional demand, which is the yellow curve that you can see, is linked to the product. And the speculative is just the anticipation of this demand. And we assume that this speculative demand will fall down to 0 once the product is operational. And so this is the way we model that the actual utility value is not at 0. Then, so this is for the demand side. For the supply side, as we said, it's a little bit complicated for PECULIUM case because the supply side depends on 2 token generation events. The first one was the ICO, so approximately 1.2 billion tokens were circulating, and then the CCO. And so, as we don't still know the number of tokens which will be sold during the CCO process, we made an estimate to have a quick idea of what would be the total supply of PCL in circulation. You should note that this strong increase of supply, which is linked to the CCO, have of course an impact on the utility value of the token. Why is that? Of course, once you increase the supply, you mechanically decrease the utility value per token. But we will see that this strong increase of supply has only an impact on the value for the few months of the CCO project.
Okay, so in a nutshell, the demand will be led both by speculative value, but also by the transactional value. The speculative value being, just like François said, the anticipation of the transactional value when the product will be ready. So then you have a balance between demand and offer, basically, and supply, that will, in fact, deliver what we call the PCL utility value, which is basically not really the price of the token, because the price is something that you measure on the market, really linked to market effects and market conditions, but the utility value, meaning the economic value based on the business case of PECULIUM, which we have designed together with the team. On the right, you have a breakdown of the demand, which is quite interesting to see because we cross-analyzed the geographic mix and the product mix. So you see quite a deformation between America, China, and Europe, depending on the product we consider. So in a nutshell, if we look at the final slide of this presentation, you see an economic model predicting the PCL utility value by 2021, designed on a market sizing approach, crossed with some financial analysis parameters that we have designed together with PECULIUM team that are linked to quite some old economic theories that we find very interesting to forecast this utility value. So here you have, in fact, quite a sharp increase of the utility value linked to the sharp demand that we can expect based on the business case that is solid for PECULIUM. But also you can see the breakdown by product. So therefore, you can have a breakdown of the value that will be delivered product by product once the roadmap for each one of this will be delivered. So in a nutshell, if we would like to to conclude, in fact, what we would say is that once it's quite simple token economics, basically, the token has to play a role in the ecosystem. Here it's quite simple. If you want to access to the services, then you will have to access to token because it's the only way you can access to the services, and it will also thank basically people that invested earlier, the early adopters, meaning what? Meaning that the demand will grow, then the supply is fixed. So basically, the more people will be interested in the demand, the higher will be the price if you consider economic and price value on the market.
Thank you.
Thank you.